Home prices surged over March. According to Dr. Andrew Wilson's My Housing Market, national housing markets have consolidated the growth that started in February. So in today's chat, we discuss what's happening to the housing markets, apartments and houses around Australia, and what that's likely to mean for the value of your house and mine at the end of this year. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Our housing markets have been in the news a lot this year. Talk about interest rates, unaffordability, a rental crisis, and everyone's trying to predict where our housing markets were going to go. Well, we're now 3 months into the year. Believe it or not, we're a quarter of the way into the year. So it's a good time to take a deep dive into our housing market and its performance so far. And it's been a fascinating period and there's lots to unpack. So to help us navigate these waters, I'm joined by Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. And we've had some very strong results over the March quarter just released, hot off the press. We shouldn't be too surprised. March is when we really pick up the full spectrum of home types. When we look at the previous months, particularly January and February, we do get, and December, we do get a lower proportion of higher priced properties coming into the market. And that tends to impact to some degree prices coming through, of course, because they're weighted against lower priced properties and not higher priced properties. But our data set has an in-house weighting factor. So even though we can discount to some degree the higher price growth, it does reflect what is certainly a strong market this year, Michael.
Well, it's very different to what a lot of people predicted at the end of last year when there was a talk about more stock coming on the market and not enough buyer depth, with talk about a mortgage cliff, and that hasn't happened, with worries about rising unemployment. Regularly in our weekly Property Insiders chats, you've actually had a contrary view, and it seems to have come out the way you're forecasting. I guess that comes from having been in the markets for a long time as well. So let's see, how have our housing markets performed this year?
Well, look, you've made a very good point there, Michael. There were concerns that buyer depth wouldn't hold up this year. We did see the markets ease over the end of last year, but that was fairly predictable. Significant prices growth always starts to push buyers out of the market because of affordability barriers. And of course, a lot of the pent-up demand that was gathered during the higher interest rate period of 2022 was satisfied. But nonetheless, we've seen some remarkable results this year. Our weekend auction markets have been a good guide. We've actually seen record numbers of sales in our weekend auction markets for this time of the year. Even though we've had record listings, we've also had record sales, which shows there's plenty of buyer depth to cover all those listings coming through. So no surprise, we've seen some strong results. The national median house price increased by 2.7%, Michael, over the March quarter compared to the February quarter. That's the strongest monthly growth rate that we've recorded since October 2021. So we have to go back to that. I guess we call it the post-COVID boom to see similar growth rates, a very strong growth rate. And I think the interesting point, Michael, is that all capital cities recorded higher growth over the March quarter compared to February quarter. The top performers were Sydney and Hobart, bouncing back after a quieter period, up by 3.4%. Next highest was Darwin, up 2.9%, Melbourne up 2.7%, Brisbane strong as usual, up 2.5%, Adelaide up 2.3%, and Perth was a bit of an underperformer as a surprise over that March quarter, up by just 0.8%, but Perth still is leading the charge in terms of annual growth. And when we look at the year so far, we can see all capital cities have recorded positive growth over the year so far. That's compared to the December quarter, with Canberra and Melbourne, the underperformers, up by 1.7%. But even though Perth was a little under the mark in terms of comparative growth rates over the month, Perth market house prices up 6.6% this year so far, Michael. And when we look at the annual results, really some standouts there. Again, Perth annual house prices up 22.4%, Brisbane up 18%, Adelaide 17.1%, and Sydney up 11%. So some very robust activity in those markets. Strong prices growth over the past year. And I think the prospects and one of the factors we're seeing driving the Sydney market particularly at the moment is the fact that when we go back 2 years, Sydney prices are only up by just 2.4% over the past 2 years. So still some value opportunities in that Sydney market. And I think those value perceptions bringing buyers out of the woodwork. But certainly some strong results there over the March quarter for houses, Michael.
Let me ask you to clarify that a little bit, because we have thousands and thousands of viewers every show, and there's always new ones. And while you're talking about the March quarter, you're actually talking about the change month to month, because the way my housing market looks at the data, I understand, is to look at the change over a 3-month period to actually give a better indication of what's going on. Would that be correct?
Yeah, that's correct, Michael. And what that does is it allows us to take a larger slice of the market. So we're looking at 3 months worth of sales, and then for a particular quarter, and then we compare it to the 3 months worth of sales for the previous quarter, but based on the month by month change. So it gives us a stronger representation of actual sales, but we're moving it from month to month. So we're moving it in real time.
Great. So that just clarifies things when you talk about quarterly increase, because these are very, very significant monthly increases. Now, you can't multiply them by 12 and say we're going to get 20% growth over the year. That's not the way the market works. But boy, it's a very different picture to what many thought would happen earlier this year.
Well, look, the market, the commentariat always seem to get it wrong in terms of the housing market. Nothing new in terms of that results.
Well, over the last little while, affordability has meant that more people are looking at the unit market, apartments, townhouses, villa units. How did they perform?
Similar results to houses, Michael. We saw strong growth, not as strong as houses. The national median unit price was up by 1.7% over the March quarter compared to the February quarter. All capital cities again recorded increased unit price growth over the monthly quarter. The top performer there was Brisbane. Again, Brisbane really charging ahead, Michael, with that unit market up by 3.8% over the month, followed by Canberra up 3.6%, some revival there in that Canberra market. We said Brisbane up 3.2%, Hobart up 3%, Melbourne up 2.2%. Some real signs of a revival in that Melbourne unit market, Michael. And I think you're right, it's buyers chasing affordability as prices rise, and they gravitate towards the unit market. We compared what's happened over the past year with houses. It's a similar result there for units, but real standouts there are Brisbane, Adelaide and Perth, as with houses. Brisbane unit prices up 21.7% over the year. Similarly, Brisbane up 21.3%, Adelaide up 17%. And we've got to point out that Adelaide and Perth are smaller unit markets. They tend to be volatile because we don't get a lot of observations coming through. But that's certainly not the case with Brisbane, which has a significant unit market. It's not so long ago, the commentators were telling us that the Brisbane market was oversupplied and it would stay that way for a long time. Well, that's certainly changed 180 degrees. Brisbane prices, unit prices up 21.3%. And over the past 2 years, Brisbane unit prices have grown by 31.5%, Michael. So some very strong results there. Similarly for units, as we discussed for houses, and certainly those big three, Brisbane, Adelaide and Perth, are continuing to lead the charge. But as I said, the standout was Brisbane. And look, prices in Sydney, unit prices in Sydney are up by 6.1% over the year. And Melbourne, similar to houses, just showing a little bit of life coming through in that unit market, up by 5.6%. But Melbourne unit prices are still lower than where they were 2 years ago. So I think there's more upside to the Melbourne unit market because there's those value opportunities as prices are still below where they were 2 years ago, Michael. And I think it's when we talk about the month-to-month data sets, it's also instructive when we look at the year-on-year data sets, because if we look at those in terms of monthly trends, we can see the stability of the outcomes similarly when we see those year-to-year changes on a month-to-month basis. Don't want to get too deep there, but it does show that consistency in terms of the top performers over the past year, which does relate again to those monthly figures.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, if we look at the drivers of this, there's a number of factors involved. We're noticing on the ground at Metropole more home buyers and investors keen to get in the market. They seem to have a sense that interest rates likely peaked. They're at some stage going to fall, even though that may be further away now than some had hoped. They've all got job security. And Andrew, despite the rising interest rates, or well, the fact that they've been rising for a while, they've been stagnant for a little while now, our economy is good, our job markets are good. The other thing is that people are blaming immigrants from overseas, but in general, they tend to rent first, Andrew, yes. And so they're creating the skyrocketing rents and the low vacancy rates rather than the depth in our housing markets for buyers. But they're going to be buyers 2 or 3 years down the track, which in my mind means this is going to continue for some time yet.
Yeah, that's right, Michael. And look, the positive drivers for the market, we really shouldn't be surprised, are certainly a boom economy. The recent unemployment numbers were quite spectacular again. We've seen over 100,000 jobs created over February. The number of unemployed has fallen sharply. So it's a very strong economy. Of course, wages are growing at near record levels. There's plenty of confidence in the economy going forward. And as you said, the outlook for interest rates is certainly on hold, steady for the foreseeable future. I don't buy into the lower rate chants that are going on at the moment. There's really no data to support that. It's just speculation and clickbait. But certainly, I think that fingers crossed that the outlook is for steady interest rates. We wouldn't be cutting rates with the boom economy, and with some signs that certainly we haven't quelled inflation to the satisfaction of the RBA. But and as you said, Michael, migration is driving rental markets, but it is about organic, I guess we could call it, buyers and sellers in the Australian markets. And I think there's a lot of value that's still driving buyers, Michael. And of course, most buyers are sellers and sellers are buyers, so we shouldn't individualise them. But as we mentioned, prices aren't that far above where they were 2 years ago. In fact, they're below where they were 2 years ago in Melbourne and near where they were 2 years ago in Sydney. So there's still value in those markets. And when we look at those boom markets of Adelaide, Perth and Brisbane, when we look at the incomes in those states, in those capitals, Michael, they're not too far below what the incomes are in Melbourne and Sydney. And I think that represents, given that median prices are well below those of Melbourne and Sydney, in Perth, Adelaide and Brisbane, I think that represents also a value opportunity given what the income levels are and given what prices are. And I think that's part of what's driving forward those markets, with other factors as well, particularly strong migration into southeast Queensland. So look, a very positive result over March, built on February. Of course, February we bounced back after a flat January, Michael. Some seasonal impacts there, but overall, certainly we can't argue with it. It's been a very positive start for our housing markets over the first quarter of this year. It is validated by those very strong weekend auction results. And we will certainly head for a little bit of a pause over April, which is typically the holiday month. People take a leave. Of course, we have Easter and then Anzac Day. And it won't be until May that the market really ramps up in full again. But certainly it's been a very positive start to the year so far.
Well, it also suggests that it's likely to be a very strong year. When we look back at the end of the year, could even end up with double-digit growth in a lot of the capital cities. Now, once a week, you report all the auction results on your LinkedIn profile. There won't be anything this weekend with Easter, but once a week, we also get together for our Property Insider chat here on YouTube, and I report your auction results on Property Update. So look forward to catching up with you next week then to see how everything pans out.
Yes, and happy Easter to everybody, Michael, as well.
Oh, I'm going to have some chocolate, Andrew. Thank you.